Hello, good evening, good morning, good afternoon, buenas noches, wherever you happen to be. How are y'all doing? So happy that you were able to join me tonight, Wednesday night. I typically go live on Wednesdays about this time. Um, Although, for the month of November, I don't know how I'm gonna pull that off considering that I will be doing some heavy duty traveling. So we'll see, we'll see. But I'm glad y'all joined me tonight. Um, oh, I just closed my notes. Hey, Janella, Catherine, who else is here? Tanya, Layla. Hey, y'all. Um, oh no. Okay, so tonight we are going to be talking about, I'm not going to say it's my favorite subject, but it's definitely a subject that I have strong feelings about. Let's just say that. Um, and we will get started. Hey, everybody in the chat. And if you are not here live and you are watching the replay, hello to you as well. If somebody is watching this because not Instagram, YouTube algorithm served this up to you, and I'm a brand new fixture in your feed. I am glad you are here. Welcome to the Picky Girl Nation. My name is Adelia Borishade. Although most people on the internet know me as Picky Girl Travels the World, I am in the business of helping Black women live life on their terms, not society's. And to that end, I help Black women plan moves abroad, figure out traveling, and figure out how to make confident financial decisions with their money. So, those are the main topics that I talk about here on my YouTube channel: money, travel, and life abroad. I have been living outside of the US for the last 7 years. I am coming to you live from my home in Mexico City. So welcome. Glad you are here. Aw, Professor LCH, you're listening in the car. Thank you. All right. So I'm trying to think what's the best way to start this conversation. Um, I What was it? Last night. It was last night. I was on Marissa Price's channel talking about financial freedom for Black women and how moving abroad played such a pivotal role in that for me. There were really two things. One, uh, I have financial freedom. I retired from my previous career at 45. And the way that there were two things that allowed that to happen. One of them was leaving the United States, and the other one was growing a substantial stock market portfolio. And as a result, I have worked with lots of women, to help them get started investing. And over the last few years, I hear a lot of the same things come up. And so that's what I wanted to talk about tonight. What are some of the myths and misconceptions that Black women have about financial freedom and about investing in the stock market that is putting us a little bit behind where we want to be. And I think I have, let's see how many are on my list. I think I have eight misconceptions. um and one of the ones that I hear a whole lot is, well, can't I just save? That's the message we all got growing up. I know I did. You need to save your money. You get a new job, girl, make sure you saving your money. The reality is that saving is not enough. I think the last few years or the last 2 years, where we've had a spike in inflation, we've learned how quickly our money can lose value, and so we know that, um, saving alone is not enough, and I love this graphic. Let me see if I can share this with y'all. Um, all of a sudden, my mind completely forgot how to work a computer. Okay. I'm trying to type, talk, think at the same time, and that does not generally go well. All right. This particular graphic, let me up, 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 oh, hold on. I forgot sharing a screen here is not the same as it is in Zoom. So I may not be able to share it with y'all. Hmm. Okay, sharing window. Ah, here we go. Here we go. Okay. In particular, I don't if I put this in slideshow, I can't see anything, so I don't know if y'all see it, but I am hoping that you can see this little graphic from Female in Finance talking about you can't save your way to wealth. You've got three women here. All three of them are putting aside $10,000. And Olivia is she does not like banks. She put her money under the mattress where she is earning no interest at all, and the value of her money is being eaten away by inflation. So you see in 5 years that $10,000 becomes 8,500. In 30 years, that $10,000, which was super quote unquote safe under her mattress, is only worth $4,000. And then Taylor is getting 4% interest because she's got her money in a high yield savings account. So she is keeping up with inflation. She's beating it just a little bit. You see the value of her account going up over the years. But who's the big winner here? It's Jenna. She's investing her money. She put it in a brokerage account. She chose some investment, and you see that her $10,000 is substantially, seriously beating inflation. So this idea, and I've mentioned this to y'all before, one of my big pet peeves when I think about whatever conversations I had with adults in my life coming up about finances, they always talked about saving. Nobody talked about investing. And if I give it some thought and I think about it in the 70s and 80s, working class people were not investing. The idea that you could invest in the stock market and not need to have a stockbroker, that's relatively new, probably like the last 20 years or so. So this idea that I just need to, saving is going to be enough to get me to financial freedom. No, no. You cannot save your way to wealth. You cannot save your way to retirement. Think about it. This was the moment that things really hit home for me. I used to watch, what is her name? The blonde lady who says you need to have $5 million to retire. What is that lady's name? Susie Orman. I used to watch her show, like, on a regular basis because I was trying to learn things, and she was talking about how much money you needed to have in, retirement, and so I did the math. I needed $5,000,000. If I needed $5,000,000 and I was making $27,000. When, in what lifetime was I ever going to have $5 million? Because on that 27,000, I still had to live, I had to eat, I had to do all the things. And I could not make the math make sense. I did not see how I could save, put money to the side and expect it to grow over there. And that's because it's not possible. All right. Halisi from Black Utopia, back in the 70s, you needed a broker and 25,000. Yeah. So I need to not beat up the folks in my life for only teaching me about saving because, for the average person, investing wasn't an option. That's different. The times are different now. So, this idea that savings will be enough, no, it's not going to do what we need to do. The second myth or misconception, the second thing that so many Black women get wrong about investing is the idea that investing my money would be safer in cash. The stock market is too risky. I hear that a lot. I hear a lot of, I don't want to lose my money. Well, if you look at our past example with Olivia putting the 10K under her mattress, somebody could break into her house and take her money, or her house could catch on fire. So there is risk associated with just saving your money in cash, right? Keeping it in cash is not uh, keeping it risk free. The risk might be a little lower, but the truth, I think two things. I think one, that idea that keeping my money in cash or keeping my money in a savings account is safer. I think one, that is a scarcity mindset. This idea that I've got to hold on to my money for fear that I might lose it all. I think that's one part. And I think the other part is observing the stock market from the outside, and you see volatility, you see these big swings up and down, and somehow you get the idea that that is inherently uh dangerous, that it's like wild and out of control and I could lose all my money, where the truth is really that stock price, just because the stock price goes up and down, that does not necessarily mean it's super risky. All investments are going to have risk. When you invest, whether it's real estate, beanie babies, uh, or in the stock market, there is going to be risk. There has to be. If there's no risk, your money can't grow. Putting your money under the mattress has minimal risk, but we know there won't be any growth there. I think a lot of people equate investing to gambling, and they are not the same thing. They are not the same thing at all. So, okay, Simone says, my husband doesn't trust the bank or the stock market. This is a very common attitude. Uh, among Black folks. It really is. And I don't mean to downplay it because we have a history in the United States that definitely has bred some mistrust of financial institutions. So I get it. I get it. Um, but I don't know about y'all, but I did not wanna work until I was 85. I didn't wanna work forever. I didn't want to keep working basically until I dropped dead. And so we have to figure out some way to amass enough money that we are financially independent. That's all retirement is that at some point you've got enough money to live off of that you don't have to work anymore. I didn't want I didn't want that, uh, to be like something that I could not achieve. And so I was like, I gotta figure this out. So, excuse me. Um, there is risk. However, everything is a risk. When you leave your house every day, you are taking a risk. When you eat food that has not been prepared by your hands, you are taking a risk. Um, so we can't afford to be afraid of risk. Okay. So there is risk, but with risk comes reward. If you don't take a risk, you cannot get the enhanced benefit that comes with doing that. And that's the difference between saving and investing, or, keeping your money in the market versus out. Um, Trying to see if there was anything else I want to say about that. Hey, Marissa, I had a client today, a very, very young client, and I was trying to explain you know, how investing works and that you can invest in a lot of things. It's just some things are harder, like investing in real estate generally is going to take more money on the front end. And then I gave the example of Beanie Babies, and she looked at me like I have no idea what you're talking about. So I'm telling this story about how these people invested some of them their life savings in Beanie Babies because they were just so sure that that risk was going to pay off for them. And so I was trying to illustrate, you know, some things have more risk attached to them than others. I don't know. You might want to check that tub. There are still people who are paying money for Beanie Babies. I don't know the ins and outs of that, but you might have a winner in that tub. Yeah, it trying to describe the Beanie Baby investment craze to someone who was not alive then, I know she probably thought, "What is this nonsense story this woman is telling me?" But it was a wild, wild time to be around. It really was. Okay, so far we've talked about the myth that saving is enough. We know that that is not the case because of inflation. And you, the amount of money you would have to save on your own. And we will illustrate that because I have a couple of actually, let's see if we can do that now. Uh, okay. So let me remember how to share this. I'm working between two different browsers. Um, and that's asking my brain to do a lot. Okay. Okay. I have linked both of these calculators in the description. So, um, no, we don't want to use this one, do we? Okay. No. Hopefully, y'all are seeing a investment return and growth calculator because I can't see. Okay. I was trying to see what y'all saw on the screen. All right. So, let's say you don't have a lot of money. You're like, I have $100. That is what I can put in my savings account. And the best I can do, maybe you can't even keep up $100 a month. Let's say you're going to put $50 a month into your account. Now, the rate of return, most savings accounts actually don't pay this much, 0.25%. This is more than double. No, this is a lot more than double. This might be 4 times what most, savings accounts pay. Really, they pay like 0.01%, but this particular calculator won't let me put in a number smaller than this, right? So let's say you are just going to, this is the interest rate you're getting, and you're going to save for 25 years. You're putting in, what is that, $600 a month, and your total investment after 25 years is going to be worth almost $1,400. Now, what I like about this particular calculator is it shows how much money you put in, that's the green, and how much money you earned, that's the yellow. This is the problem with saving. Saving is really about a short term solution. This is not about making your money grow, right? Y'all see that. Um, so if we were to change nothing about this, but instead of starting with $100, oh, that's annually, should be monthly. Okay, I knew that number didn't seem right. Okay, so you're putting in $600 a month. At 25 years, your investment is worth $15,500. But again, notice you've only made about $483 in interest. And remember, 0.25% is significantly higher than what regular savings accounts are making, right? What if we put this in a high yield savings account? Most mine right now is paying 4.25. Okay. Now we start to make some progress. I've made an extra $10,000. Notice my contributions make up about 65% of what's there. I've actually earned $11,845 in interest. This is better. This ain't enough for me to retire on, though. But if I were to invest in the stock market, I'm probably gonna have based on historical averages, probably about a 9% return. And I know some of y'all are thinking $56,000 still ain't enough money for me to retire on. Some of you, I would challenge you to say, well, how much money you got in your retirement plan right now? But two, I want you to look at this part. Notice that by putting the investment in the stock market, look how little the green section is. This is how much I've contributed, but look how much I've earned. To me, that's the big difference between the power of what investing in the stock market can do. Like, this is how you put your money to work for you. Okay. When you're putting it in a savings account, you doing all the heavy lifting. When you put it in invest in the stock market, you're not having to do anything. You just drop the money off. It's doing all of the work. Or as money coach Malika says, her money makes money babies in the stock market. Okay. So that's why we gotta get rid of these misconceptions and these misconceptions. I was gonna say misideas, but that's not really a word. Um, Something else that I hear a lot, this would be number 3, is that investing isn't important. Like, I got all this other stuff I'm dealing with. I don't have time to think about investing. Um, I could not disagree with that statement anymore. Um, Eventually, you want to stop working or have the freedom to decide, I don't want to work. You want to have money so that you can pursue the life of your dreams, don't you? Aren't you tired of if your life is so full of all of these things and these obligations, wouldn't it be awesome to have enough money that you can say no to some of that stuff? Also, keep in mind that in the US, the pay gap that women experience, being paid less than men, and in particular, Black women experience. I think Black women are at like 85% of what white women make, but when you compare that to what white men make, it's still something like 50%. Um, and so investing is very, very important when you think about the gendered wealth gap. Okay. Um, So no, it is very, very important. Okay. 65% of what white men make. Okay. Oh, all right. I like this question. F Doctor asks, is real estate considered an investment? Yes. There are multiple ways to invest. You can invest in real estate. You can buy property that you intend to hold for a little bit, that you expect to go up in value, and then you sell it at the higher price and you make a capital gain. That's one way to do it. Or you could buy a property that's going to generate income, like a rental unit. That's another way. Um, there are two reasons I personally do not talk about real estate investment. One, I do not enjoy it. And two, the barriers to entry are higher. Um, I was a public school teacher. I worked a whole lot of hours. I had kids at home. I was trying to do all of the things. On top of that, I was also somebody's landlord, and I not only did I not enjoy it, like, that was one more thing on my plate, and y'all know who I am. I want things to be easy, and so for me, one of the reasons I talk about investing in the stock market is because this is the easiest way to have your money make more money. That's what investing does. You have X amount of money when you start and you buy some kind of asset, or let's say your friend is starting a restaurant and they are looking for investors to put that seed money in. Y'all have watched Shark Tank. I was like, I know there's a shark in the name of this show. You've watched Shark Tank, and those people are asking for investments in exchange for so much equity in the company, right? And so that's another way to invest. I've got this money. I'm going to give it to you. You're going to open your bar. It's going to either you're going to pay me back what I gave you plus so much interest, or maybe I get a certain percentage of profits, something like that. There are many ways to invest. But to me, investing in the stock market is the thing that you can do with the least amount of money and the least amount of hassle. So that is why I talk about that as opposed to other forms of investment. Okay, we can't afford not to think about investing. It's your future we're talking about. Exactly. So this idea that um like it's not that important, there are bigger issues. Um I disagree. I wholeheartedly disagree. Something else, I guess this is myth number 4 that I hear, and I think somebody said it. Yep, Winnie did. No, not that one. Ah, not soon enough said it. Only rich people invest. And as we mentioned earlier, for those of us who are my age or older, for us, that's exactly who it was that invested. Because if you needed to have 25K upfront to invest and you had to pay for a stockbroker, absolutely. That's rich folks' game. But the world that we live in now, with discount brokers, absolutely not. Everybody, anybody, if you've got $2, and I'm that is not an exaggeration, y'all. If you've got $2, you can invest. So it is no longer something exclusively for rich people. Um, okay. For a novice investor, what about a high yield savings account? That is not an investment. That is a savings account. Investing is for what you do for long term goals. Savings is what you do for short term goals. You want to buy a car and you don't want to have a car note, so you want to save up that money. That money goes in a high yield savings account. You want to pay for somebody's continuing education, be that college, trade school, something like that. That's a long term investment. You want to get to the point that you don't have to work anymore. That is a long term investment. A high yield savings account is a great place to store your emergency fund, but that is not an investment. Remember, an investment, there has to be an element of risk. Otherwise, you're not going to have a 9, 10, 15% return. Okay. Um, $2. Okay. Uh, there are this, we're talking about this not being a game exclusively for rich folks anymore. With the discount brokerages, we're talking about your Fidelities, your Charles Schwabs. Vanguard is a discount broker, but I don't think they have fractional shares. At one point, a single share of Amazon stock cost $3,000. And so if you wanted to buy Amazon, just even a share, you needed to have 3 grand lying around. When I first started investing, I didn't have that kind of money. Um, All right. Aileen says that Charles Schwab, the minimum is $5. I honestly believe I have made a trade for $1. I don't think I can do like a 50-cent trade or 75 cents, but yeah, $1 or 2 because you can buy a fraction of a share. So this idea, and that was one of the things also on my list, that you have to have a lot of money. That is not true. You do not need a lot of money. Um, and some folks think that if I can't invest 200, 300, $1,000 a month, if I can't do that, it's not worth doing. And I disagree with that wholeheartedly as well. Um, I hope you saw from our little demonstration of somebody just doing $50 a month, not even $50 every time they got paid. $50 a month, you're still able to create a sizable nest egg. So uh this idea that you have to have a lot of money. No, you don't. Now, we kind of started this conversation, this sidebar about discount brokers. Um, and Genesis mentions Robinhood. No, don't do this to yourself, y'all. Not all discount brokers are created equal. There are many reasons that I do not like Robinhood. Um, if you're just getting started, stick with the big names. Charles Schwab, E-Trade, even Ally, Vanguard. Robinhood decided to appeal in an effort to appeal to young people, that they wanted to gamify the investing process and had these young folks engaged in trading, not investing, but trading with virtually no knowledge. This is the company where, how old was that kid? Was he 19? Was he 21? Opened the app one day and it said he owed like $1 million and he unalived himself. No, I don't know. Not Robin Hood, somebody else, not them. Not them. Okay. Um, so yeah, fractional shares, it's not just for rich folks. Okay. Um, so something else that this is what I want to this is kind of related to the whole idea that investing is for rich people. Um, Society has done a really good job of conditioning women, and in particularly Black women, to believe that we are not good with money. And so if you are a Black woman who did not grow up in privilege. I think we internalize that a lot more. And so we see things like investing in the stock market as being something we can't do. Like, I don't have enough money, I don't know enough. And as we talked about earlier, this idea that from a scarcity mindset place of like, I don't want to lose all of my money. And um there have been multiple studies, and this is, I guess, number 5 on my list. The idea that men are just naturally better at investing. There have been multiple studies done by Wells Fargo, done by Charles Schwab, multiple of the brokerage firms and financial organizations that have discovered that actually no, women are better investors. Okay. Um, and generally, when you look at the portfolio of women, the women's portfolios, stock portfolios, and you compare that to the portfolios of similar men, demographically, our portfolios tend to outperform theirs. In a 2021 study that Fidelity did, they found out, oh no, um, compared annualized returns of 5.2 self-directed accounts. Um, the average woman's account earned higher returns than the average man's account. That's because men have a tendency to trade more frequently. That's part of the problem. They just won't leave stuff alone and let it grow. Men tend to go from one extreme to another. So in response to something they're seeing on the news or what have you, men are more likely to go in and be like, "Oh, put me 100% in bonds," and then swing the pendulum the other way and be like, "Put me 100% in stock." Women are more likely to remain calm during market volatility. Nationwide did a study, and they found that only 8% of women liquidated their retirement accounts when okay, like in 2008, 2009, a lot of people saw that the stock market went down and they panicked and they sold off all of their stuff. In situations like that, something like 15% of men did that versus 8% of women. And of course, we know what happened. We knew this was going to happen. Those people got out at the market, they sold at a loss. The market went back up and then they tried to get back in at higher prices. It's like, why would you wait to buy something when the price goes up? But that kind of thinking of like, "Oh, I've gotta react to this." That is something that helps because we don't react quite in the same way that men do. Our portfolios tend to be better. Women also tend to take fewer risks than men, and women are less likely to get caught up in, like, shiny shiny object. Um, so, like crypto. NFTs. And for some of y'all, you're like, what are those things? You don't need to be worried about them. But those of you who remember a couple of years ago, the craze about NFTs and men as a whole, we're generalizing here, but this is what the studies have found, are more likely to be like, oh, there's this new uh, thing where I could make money. And they're more likely to jump on those things. And those things tend to be riskier than women. So, so women are actually much uh, better at investing than men. So if that's something that's been holding you back, let go of it, sis, because you're wrong about that. Um, something I guess this is number 6. Something else that I get a lot is I am too old to start investing, and there is a lot of truth to the fact that the earlier you start, the less money you can put in that will grow to be more money. So like if there is a young person in your life, y'all, no matter what what choices you made financially, if there is a young person in your life, Talk to them, get them to open a brokerage account, a Roth IRA, okay? Because their time in the market here, I have a thing that illustrates that really, really well. And so let's see if I can. Oh, okay. Trying to share between these two different browsers is throwing me off. Uh, okay, maybe I can't. I tried to. Okay, maybe if I do this. Okay, maybe this will work. Sorry, y'all, for my tech difficulties. Where did it go? It sees it. Okay, the browser has blocked your screen. Click the screen icon on your address bar to align. I don't know what's going on. Why did it block my screen? Okay, here we go. All right, so this is the impact of when you start investing. And I like to show this to my clients. The blue, I don't know how well y'all can see this. If I, oops, nope, don't want to zoom in. The blue, if you started earlier, this person started 25 and they were just putting in $200. Okay. Look how much bigger their rate of return was than the people who started later. Okay. So there is absolutely an advantage to starting sooner. However, y'all hear me say this all the time. The best time to start investing was 20 years ago. The second best time to start is today. So you can it doesn't matter that you are older. You can still take advantage of the stock market's ability to grow your money with little effort on your part. Will you make as much money as you would had you started earlier? No, but that doesn't mean it's too late for you. Something else to think about is even if you are, let's say, 65, according to where did I get this from? I think I got this from the CDC. Let me zoom in so I can see it. Um, and these are old numbers. These are numbers from 2016. So I'm going to guess that they're better now. But if I look at Black women, non Hispanic, if you're at 65, your life expectancy is at least another 20 years. So that's still plenty of time if you want to grow your money. Okay. So this idea that I'm too old, how is that possible? Do you not still need money? I think, so there is no too old. And actually, Black women over the age of 60, only 41% of Black women older than 60 report having any money invested in the stock market. So that is a specific part of our demographic group that is missing out on this way that you can make money. So there is no too late. Okay, Halisi and Rick, we started very late and Rick grew his money from 0 to 40,000 in 4 years. So it- I don't see age as a valid reason not to invest. Okay? Absolutely not. Um okay. I guess this is reason number 7. Um investing is hard. It's complicated. Um, that may have been true at some point, but luckily we are alive in the year of 2023, and that is not true anymore. Um, I think that a lot of people feel like their lack of knowledge makes them believe it is much harder than it is. As y'all know, I sponsor I sponsor, I host, I'm not sure what the right word is, and now I'm trying to find the comment. Okay. I host the Get Started Investing Challenge. This is a challenge specifically for Black women. I think it's very clear right now why I focus on that demographic because we are the most behind when it comes to taking advantage of investing. Okay. And if you go to the website, getstartedinvestingchallenge.com, you can see some of the comments previous participants have made about the challenge. And I think every single one of them will come out and tell you it isn't nearly as hard as they thought it might be. Okay. It's if you can buy things on Amazon, if you can order a pizza on DoorDash, you can buy a mutual fund. It is not that complex or complicated. Yes, there is new vocabulary, there's some new concepts to learn, but the actual act of investing is not hard at all. Okay. Um, and so the last thing I have on my list that I often hear, and I think somebody said it in the chat. Let me see. Yes, Amy Peterson said it. I need a financial advisor. Okay. I hear this a lot. I can't invest because I don't have a financial advisor. Um, you don't need one to be able to do that. I think there's several things going on with this misconception or this belief that one, it's a complex thing. Two, these people they know more than me, and maybe they know more than you, but they're not going to care about your money more than you do. Nobody's going to care about your money more than you do. So you don't need a financial advisor. Now, if part of your journey to a life of ease is I don't want to be bothered with that, that's a different conversation. And that's coming from a place of I have the knowledge, I can tell this person what I want to happen, and then I leave it up to them. But this idea that you need that, no, I reject that. I do not believe that. Okay. So no. And honestly, y- even if your desire for ease means you don't want to bother with it, you can set up your portfolio creation to be such that it's all automated and you only deal with it like once a year. You look at it to see if you need to rebalance. um th- over like the last 6 years, I look at my portfolio maybe once a year. So I know there were a few years in there I never looked at it. Things were set up to automatic invest, to make automatic purchases or whatever. And outside of that, I just left it alone. And again, that ability to leave things alone is one of the reasons that women are better investors than men. So it's very different than I don't want to come off like I'm anti financial advisor. That is not the case. But I am pro informed consumer. What I do is all about making sure that you can make financially confident decisions. It's like if you were going to buy a car, don't you do some research? Don't you, look at gas mileage and safety and reliability statistics so that when you go to the car dealership and the car dealer is laying it on thick to get you to buy this model instead of that model, you're like, but I know what I read. It's the same thing if you are going to hire a professional, whether they are a financial advisor or a financial, what's the other, planner. whoever it is you decide to spend money with, I want you to be an informed consumer before you go to them. What I don't want you to do is those people who walk into the car dealership with a bag of money and say, I need a car. Because those people are not going to get a great deal and they're not going to get the proper car that matches their needs. The same is true if you just walk into a financial professional's office and you haven't done the work to figure out what it is you're looking for and what your needs are. Okay, so I'll get off my soapbox on that. So now I can go back through your comments and see if y'all had any questions. Yay, Anita. I help my daughters and grandkids open their brokerage accounts. Their gifts from grandma are now putting monies to buy ETFs. This is what I'm talking about. This is what I'm talking about. Um, that's we all in our community, in the Black community, there's a lot of talk about generational wealth. And some of these folks that are on Instagram and TikTok, the things they are telling people to do in the name of creating generational wealth, it's a lot. And it's making things harder than it's got to be. Something as simple as making sure everybody has a brokerage account and the gifts that you would give them. Now, think about the magnitude of what Anita is doing, the money that she's given them for their birthdays, Christmases, whatever. It's not just that money. It's not just that money and if it was put into a high yield savings account. Think about exponentially the growth power that that money has and that these are kids who are going to, graduate college and look up and there's several $100,000, $1 million sitting there waiting for them. Like, that's generational wealth, y'all. That's generational wealth. Okay. Um, all right. What are your thoughts on day trading? That's a lot of work, and I don't know that the juice is worth the squeeze. I don't need extra work and research. I don't need that hassle. I don't need the hassle of dealing with short-term capital gains tax. My current tax situation is complicated enough. And honestly, I don't know for someone like me personally, and I think for the majority of people, I don't think the juice is worth the squeeze when it comes to day trading. And the day traders that I have spoken to all talk about how much money you got to be willing to lose in the beginning before you figure out what you're doing. So, mm, no thanks. No thanks. Okay. If you leave your job and cash out your investments before 59, how much is the penalty? It depends on how you leave and how you cash it out. Like the rule of 55, if you retire from your job the year you turn 55, you can actually touch that money in a pre tax account without penalty. Okay. So in that situation, there is no penalty. If it is just, I woke up one day and I'm 42 and I'm tired of this bullshit and I want out, you are going to pay a 10% penalty to the federal government. Plus, if it is pre tax money, like a 401k, a 403b, you're going to have to pay the appropriate income taxes for the year that you take the money out, which could be substantial. So it just depends on how you do it. In my younger days, I didn't invest because I was afraid of losing everything and going back to being in poverty. I had to deal with the trauma of poverty before I could invest in the stock market. And I think that's a real situation for a lot of us. We have to really examine what are our beliefs around money and how we use money. Um, and why many of us feel like I gotta hold on to this money tight because I don't know if there's gonna be any more. I had some of that myself. Um, I'm not that person anymore. Now I'm just like, it'll work out. I'm not stressed about it. Um, what do you think about investing while paying off debt? I have no issue with that. I know that there are some financial folks who will say you should not invest before you pay off debt. I say, can you do both at the same time? Like, why can't you do both at the same time? So that's my take on that. Um, I invest in all, but I am worried about the current climate over here. Maybe far fetched, but I worry about these fools seizing accounts of Black women, etc. In the world we live in today, I don't know that too much is far fetched. Um, I my portfolio is in the US. It's held at Fidelity. It's in the US. If, things go sideways there, that I take a big financial hit, but I'm not gonna spend a lot of my energy worrying about that because I can't control that. What I can control is, do I have other uh, sources of income? Are there other assets? Other ways that I can invest, to maybe if it all goes to hell in the United States, is there some other money that I could have that might just make the road to recovery a little bit smoother? But I am not going to spend a lot of my energy stressing about that because there's nothing I can do as a Black woman, as a Black American woman, to make systematic changes to a system that doesn't want me to succeed. Okay. Let's see. Um, How complicated will my tax returns become if I start investing? Living abroad makes things more complicated. It depends how you're investing. If you are investing in um, a retirement account like an IRA or a 401k, it's not going to make any difference at all. If you are investing in a brokerage account, it's not gonna make a substantial difference because I believe the trigger amount for long-term capital gains tax is something like $40,000. So if you're not making $40,000 annually in capital gains, it's not gonna impact. There might be an extra form you include, um, that says, like, "This is what my capital gains were, but there's not going to be anything substantial." Now, our Black Utopia makes a good point. Depends on where you live. Currently, I live in a country that is not enforcing its rules about foreigners and taxes. But if you live under a tax regime that is enforcing it, they may have local rules, but on the US side of it, it's not gonna make that big of a difference. Okay. Um, which brokerage firm do you think is the most newbie friendly? I think a lot of the discount brokers, it's six in one hand, half a dozen in another. It's more of who you should avoid. um, like Robinhood. Don't do that. People get lured in by like, oh, they're giving me a free stock. But then when you try to get your money out of your Robinhood account, they're like, oh no, we're not going to let you do that. Or if you decide, you know what? I like the fund choices available at Charles Schwab. I want to roll my account over to Charles Schwab. Robinhood will be like, okay, and that will be $57, $100. I don't know what their fee is, but I know they charge. But any of the major discount brokers, E Trade, Fidelity, Charles Schwab, Vanguard, those are all good. All same, same. Ba, 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 ba. I'm just going back through here. Oh, yes. Can I borrow against my grandson's insurance policy to invest? How does that take away from the face value of the policy? It depends on the policy. And I am not well versed enough to answer this question, but you know who is? Candace Costin, who was on this summer talking about insurance. Um, if you go to the video, it's a I can see the thumbnail in my head. It's yellow. There's an umbrella and there's a picture of Candace. If you go there, her contact information, that's who you need to talk to about doing that. Okay. Bum, bum, bum. So, if this conversation, I'm still going backwards through the comments to see if I missed anything. If this conversation has gotten you to thinking that you need to take some action, and you're like, I hear what you're saying, Adelia, that I can do this myself, but I really like a little guidance and a little hand holding. You might want to consider signing up for the Get Started Investing Challenge. It starts on October 15th. It is specifically for Black women. It's a 6-day challenge, and the goal is to get you to make your first investment. So if you are a newbie and you feel like you need some help, it is definitely for you. If you're like, I'm not a newbie, and I know I got a 401k somewhere, but when those papers come in, I just put that stack of envelopes on the table and I don't bother with it anymore. Um, you could benefit from the challenge as well. Or if you have been investing at work, but you don't really understand what you have in your 401k, I think the challenge will be beneficial for you as well. And again, if you're interested in that, go to Get Started Investing Challenge. We have over the 6 days, there are 3 live Zoom calls, and there is an online community that you get access to permanently, even though the challenge is only 6 days long. And if there are some former challenge participants hearing this and you're like, hold on, I didn't get that. I just added it and I have on my to-do list. I need to add y'all to the community. So that's coming. That's coming. Um, where'd the comments go? So yeah, that's that. Okay. I don't think I have any more questions in here. So if you have been sitting on a question and you really are dying to get an answer, this is your last chance to get that in. Um, okay. I think I'm almost back at the top. All right. Okay. So the calculators in the description of this video, there are links to 2 calculators that you can use that kind of just give you an overview of, you know, how would the money compound if I can only afford to put in this amount per month? What am I looking at this rate of return to give you some idea of the growth potential your money has? Okay. Okay. Here is another. Oh, there's several questions down here at the bottom. Okay. Chase versus Fidelity. If we're talking about as a place I would pick to put my investment account, I would not I tend to want to avoid banks because that's not their specialty. So what kinds of funds you would have to choose from might be limited. Their fee structure, they might be charging you all kind of fees, and I'm not paying for the privilege of letting you lend my money to other people. So in it, if we're talking about investment purposes, I would not choose a bank. Any bank, not just Chase. I would not choose a bank. Um yes, okay, first of all, I don't advise anybody. Remember, y'all, I am not licensed to give anybody advice, but I do work with 20 somethings. I had a client today who I think is 18, 19. So yeah, I talk to young folks. Um and if there is a young person in your life and you want to gift them a session with me, or you want to gift them a challenge or something like that, the 1 hour sessions, you can do those at bit.ly/askadelia. Um, I do Financial Confidence Academy is coming. So if you're like, I wish there was kind of like a financial education course my young person could take, that's probably a good option for them as well. Um, Thank you for this. How do you feel about stashing your self-managed IRA funds in a mutual fund until you're more adept? Um, I am a fan of low cost mutual funds and EFTs. I don't think it has to get more complicated than that. But if you're somebody who the thought of researching and analyzing individual stocks, you're like, "Oh man, that's the lick. That's where it's at," and you want to learn that eventually, I see no problem with what you're proposing. Now, that is not something I talk about or I teach about because I'm not interested in that. But I am a big fan of low cost um, mutual funds and ETFs. Pa, 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 pa. Um, if you had about 10,000 to invest, would you suggest your course? I would suggest the Get Started Investing Challenge if you want to learn about the basics of investing, you want to learn about the different kinds of accounts, you want to understand what are the different things you can invest in. Now, if you're looking for investment advice, I don't do that. But the amount you have to invest is not important. It's about, do you want to learn to do that? Okay, Jess, thank you for the super chat. Okay. This does not shock me. I am not a fan of big banks. Somebody I saw there was a question in here about my thoughts on Ally. Um, I I have been an Ally customer for probably 8 years. They're perfectly fine to me if you are comfortable with a quote unquote internet bank, a bank that does not have physical branches you can go into. That has not been a hindrance for most of my transactions with them. But even the bank that I have in the US, it's not a big bank. It was a small regional bank. Big banks are driven by profit and they want to profit off the backs of Black people. They do not want to serve us. Okay. Thank you, thank you. If you enjoyed this video, please give it a thumbs up, y'all, to help the algorithm here on YouTube know that it's a good video and who to share it with. And if there is a Black woman in your life who you think could benefit from tonight's conversation, please share this video with them. That's why I do what I do here. Thank y'all for joining me tonight, and I will see you again live next week at, instead of 7 p.m. Eastern, it will be 8 p.m. Eastern, but I'll be back live next week.